Okay, welcome back to Module 2 of the Build a Profile course. We're going to cover 4 market behaviors and how to see them. And before we get into that any deeper, we're just going to once again remind you just that there is risk involved with trading. Risk involved really in any business endeavor, whether you're an entrepreneur or you're a startup. But because of the time compression that occurs in markets, it just needs to be more at the forefront. In this module, we're going to learn how to identify the 4 behaviors that markets display so that you can begin to build a hypothesis of what happens next. This is going to be I think, a game changer for some of you. Some of you who have been around markets for a long time, this is going to be really helpful just to go back and look at a simple approach to markets again. Always going back to basics. You know, we talked about in Module 1. And one of the things to do is to keep it simple. You know, keep it simple, stupid, really, because I need that reminder too. I add complexity, and that often leads to degraded performance. So trying to keep things as simple as possible. We're going to look really simply at some behaviors in the markets, how to see them, look at a couple setups, and you know, build deeper into our foundation. But before we do that, real quick, I just want to go back to the last module and look at our homework here real quick and just see how we're doing. You know, these are the homework items for Module 1. Is this a fad or a passion? Well, you know what, you may not know what the answer is to that yet. You may not really have a good grasp on that until you've gone through this course. So, you know, at this point, you could say it's passionate, but once you find out the work that's involved to get successful, you may say, you know what, this is just a fad and I'm out. Or you might just say, yeah, you know, I'm just checking things out. Wherever that is, we need to answer that question by the time you're done with the course. Second, you know, do you have the support of your friends and family? Again, as you learn more about what trading requires and active investing requires, both mentally taxing, psychologically, emotionally taxing, is there a support group around you to win and celebrate the wins and support you when it's hard? How much free capital do you have? You know, we mentioned this in Module 1. We're going to reiterate it all through this, that this is not gambling. We're approaching this like this is a business, a side hustle, if you were. And so, you know, when we think of this, I mean, we know that there's a risk of loss. We're going to do our best to, you know, stay around that, but we don't want to be damaged to the point of no return. So, how much, you know, capital that if I lost it all, you know, could I go to explore this? Do I have any? And how good am I at deliberate practice? And deliberate practice, which is different than just, you know, going out there and getting it done. You know, an example from my life, I've been a competitive cyclist my whole life, and it seems. I started when I was 12, and have gotten to race in national championships and world championships. And you know, one of the things that was always remarkable to me when I go back and review my training is that the skill and the ability that I had was vastly different in different seasons of my life when I actually rode less and trained less. And what I found is that the times when I went out and did specific workouts to work on specific aspects of my aerobic system, I didn't need to train as much. But every time I went out, I had homework, I had something I was trying to accomplish, as opposed to times when I spent lots of time on the bike, lots of hours, but they were just meandering. There was no real purpose, so there was no structured approach. So I didn't get the performance I was looking for. It's a good question for yourself is how good are you at setting out and building an approach and sticking with it and gaining in skill? And we're going to help provide a methodical approach. It'll be up to you on whether you do that. And then second, did you get that account created at investing.com? Because we're going to add some additional aspects to that in this next module, and that will be helpful so that you can continue to work along with us and continue having fun. Okay, so that was the homework for Module 1. Let's get back to Module 2 and rock and roll. Again, the objective here is to learn to identify the 4 behaviors that markets display so that you can begin to build a hypothesis of what happens next. Why a hypothesis of what happens next? Because if I have an idea of where the market might go, this is in line with the concept that we had in Module 1, which was that the best opportunity is the one that has not yet been identified or is early. So if I've seen a market moving in a direction and I have a decent hypothesis on where that's going to go, and I can position myself in such a way to leverage that, I can be early. Now, you might say, four behaviors. Why are we looking for four behaviors? Well, in essence, I believe that there are three general approaches to markets. They're expressed in lots of different facets, but three general approaches to markets, and they are as follows. One is a fundamental approach. So this is the idea of, there's a company that is undervalued, or they've got new technology that they're getting ready to release. This is going to make that company more valuable, or there are economic pressures, supply and demand around a commodity that's going to cause this thing to either appreciate or depreciate. This is a fundamental approach, and I have served and continue to serve market participants who are wildly attached to the fundamentals. And one of the things that often occurs for a fundamental trader is that they spend lots and lots of times frustrated. And the reason that they spend times frustrated is because while eventually fundamentals and price do converge, they are often disconnected. And this is one of the natures of markets, is that you'll have periods of time where the fundamentals and the price just don't line up. If you want a great example of that, go read Michael Lewis's book, The Big Short. And I mean, there were people who saw the disconnect in the housing market leading up to the financial crisis in 08 and 09, and they were positioning themselves to benefit from the market correcting, and just didn't correct. The prices were not in line with the fundamentals. Eventually, they did come back to converge, but until then, it brings a lot of pain. It also means that you can have capital tied up for a long time. So I had a friend of mine recently who was all excited about this one, specific company and a stock, and I think the trade eventually came in from him. But while he was in that trade, he was in one position that took this trade to come in. I bet I traded 50 times. So, while the opportunities that I had weren't as great as the one opportunity he had, I ended up making more money by a long shot because I wasn't as tied fundamental. As you can tell right now, I'm not a fundamental trader. Second, technical. So these are traders who build their perspective. They don't look at the fundamentals. They don't really care about, underlying value or supply and demand. What they look at are prices, patterns, and indicators and structures based on the arrangement of price. So if you have seen, crazy charts with all of these angles and things and mathematical things on that, this is often a technical trader. They'll build signals. They'll guys that are building algorithms that have automated trading systems. Most of them are technically based. Okay. Some are smart enough to include some fundamental information, but most of them are technical because that's the easiest thing to program. I am not a technical trader. What I am, and what I in terms of trying to help you accelerate, is I'm a behavioral trader. What I mean by that is, how do participants react to price? What does that tell us about what comes next? Behavioral, how do participants react to price, and what does it tell us about what comes next? And the reason I'm behavioral, I mean, having been on the retail side and in the institutional side of the markets, I have found that the ones who make money, the ones who can continually perform, are not the ones who are successful fundamentally, are ones who have large cash hoards. That means that if the price is going in their direction or in their favor or actually against them, they can continue to add to the position until the point that the price turns in their favor, and then they start to make money. The Warren Buffetts of the world. I mean, he can participate at a level all day long and have lots of fun in ways that most of us cannot, right? Technical traders do find signals and systems that work for them, but they're often wrong. And they get frustrated by this notion that, oh, well, it signaled, and then how come it didn't work? As a behavioral trader, what's fascinating about that, and why that's what the pros use, and what I mean by pro is, I mean someone who is competent in the market, can consistently pull money out of the markets, can operate either independently or at an institutional desk, and kind of rise above, is that they recognize that what they're looking at is an auction. That price is auctioning back and forth, and when you have an auction, you have different participants and behaviors and emotions and all that plays in. And as a behavioral trader, you can recognize the fundamental traders there. You can recognize the technical traders, and you can benefit from it without getting caught in all of it. Actually, some of the approaches I use are somewhat technical, but I'm more effective as a technical trader because I understand the behavior. Right? So those three approaches. So when I talk about, people ask me like, what kind of trader are you? I'm a behaviorist. I'm looking for the same behaviors that I would see if I was at an auction house. If I was, down the street, down the interstate, from where I live, there is a large equipment auction house. If I was starting an excavation business and I went down there to buy a backhoe, and I saw a piece of equipment come across the lot that was going on auction, and I was like, okay, sweet, I'm starting a company. I've got a small credit line, so I want to be really picky about what I buy. And then I see next to me, also at the auction house, is somebody who's been in the business for 30 years, who has plenty of cash, and if he wants that backhoe, I can't compete with him, right? But if everybody that was at the auction block was in the same deal as me, I know that there's limited things that they can bid on, and I'm going to change my behavior based on who's there. So when I'm looking at the market, I'm looking for the behavior at play, and how can I benefit from that. And as behaviorists, we're tapping in, and why it's effective as a behavioral approach is because humans, while lots of things around markets change, humans don't change. They continue to exhibit the same behaviors over and over and over and over again for millennia, and we forget how much we've done the same thing. The average person in the United States has a historical reference of about 25 to 30 years. That's about the window that they can remember. That's why if you go back and look at political commentary 25 years ago, it's almost identical to today, but everybody thinks we've made progress. We really haven't. We just forgot that we already had those arguments. Okay. But as Covey says, it's not what happens to us, but our response to what happens to us that hurts us. So if I can understand markets as a behavioral, an emotional component, and how I respond to that, I'm in a much better spot. I love this from Natsume. If I'm an inconsistent creature, perhaps it is the pressure of my past and not my own perverse mind that has made me into this contradictory being. I am all too aware of this fault in myself. You must forgive me. The irony here is, he talks about that he's contradictory, and yet that he knows this about him, and he knows that this is this fault that continues. So, it's this it's this consistent behavior that is exhibited over and over again. What sets him apart is he understands that. He's understanding that often the way he desires to participate and the way he actually does, or the way he desires to show up and the way he does, are different. This is really important as market participants, because it's a funny thing happens when you start getting involved in markets and you start really trying to press in, is all kinds of things go haywire emotionally and psychologically. That's why Denise Scholl and Brent Steenberger have fantastic businesses in markets, because you have the same head games that are at play as are in professional sports. People they get all wrapped up in it, and you almost have to be able to step back, step away, and say, hey, what's going on, what's not? And the primary fundamental trader doesn't get that. They just think, well, there's just a disconnect between price and fundamentals, and eventually they'll converge. Or the technical trader is like, why doesn't it work this time? It's supposed to work. But if I'm a behavioralist, I go, oh, well, it's because markets are composed of participants, and the participants are people, and people do irrational things. Like they do consistently irrational things. What we believe is heavily influenced by what we believe others believe. Let me restate this. What we believe is heavily influenced by what we believe others believe. When we talked about in Module 1 how to win in markets, is to be out in front, be early, look for opportunities and identify opportunities that others don't see or haven't you jumped on seeing yet. Well, to do that, we have to believe that nobody else has seen that yet. That makes sense? Like, so if we believe, for example, in the time that we're recording this, Bitcoin and cryptocurrencies are really, really popular, and everybody's talking about them. And so there are lots of people that just think that it is just going gangbusters. I am not. I am not going to be active. In fact, if I'm going to be active, I'm looking for opportunities to sell it, which some of you will. That's a game changer. I can actually initiate a position by selling it without owning it. Some of you know what that means. Some of you that's going to make your mind hurt. Don't worry about it. We're going to talk about that when we talk about how to trade the specific products. But what we believe is heavily influenced by what we believe others believe. So if we believe that everybody else thinks it's undervalued or that the opportunity is not yet over, then we'll behave one way. And if we believe that everybody believes the opportunity is over, then we'll do something else. And when we look at the markets and the way that we arrange the information that we look at, we can get some greater clarity on the reality of what's going on, because perception's built into this. And the farther away perception is from the reality, the more we're going to get hurt. Okay, so let's talk about more of these 4 behaviors. And we went a little existential there for a second, but let's go back to these 4 behaviors and then look at them specifically, how we identify them and how you can benefit from them. Okay, there are 4 behaviors that markets exhibit, and we recognize these on charts. And a chart, we're gonna look at a couple examples here. A chart is simply a way to arrange price. Okay, that's all we're trying to do. We're just trying to arrange price. 1 is a beginning, an initial directional move. What this is price moving in a direction that we can clearly identify. This is the first behavior. All right, we'll pull. So if we look at I've got, for example, a chart of Apple stock here. This is on a 60-minute time frame, and we've got a candlestick chart. Now, there's lots of different types of charts that you can use. These are what are called Japanese candles, and they simply, just as a refresher on what's going on here. So each one of these represents 60 minutes of time. Okay, and they have 4 things to know. Based on the direction of the candle or the color, tells you certain things. So this one, which is hollow, this is primarily buying that took place. The low area here was the open of that session. The top line here is the close. There was a little bitty wick, which that represented the high of the session, and this little wick down here is the low of the session of that 30-minute period. Make sense? So you can see that in each period we do different things. Some have the open and close are real close to each other, like in this one. Sometimes that they've got these long wicks, which is hence the candlestick around that. But they do all kinds of different things. But if we zoom back and we look at this over 60, again, these are several days, we can start to see some of these things. One of those is a beginning. So directional move. From here on the 27th of, this was like October, you can see a move here. Okay, directional move. Pretty easy to see here. There's actually another directional move taking place here. The slope is not as steep, but yet there's another directional move taking place there. Okay, and there's rarely textbook examples. There's more, can I kind of look at and see this behavior. All right, so that's the first one, is the directional move. The second is something called rest. What I mean by that is markets don't go in one direction forever. Right? So on this directional move that we call it here, notice that what came after it was another session where we just kind of trade sideways and don't really go anywhere. The market was resting after this move. So imagine an auction, and price is going higher, and all of a sudden the activity just kind of starts to pause for a second, right? What's happening is that the auction's taking a breather, and we're trying to decide, are we going to continue in that direction or not? Is anybody else willing to go in that direction? Right? So this is the rest, and rest always comes after a move. So think about this. If you can identify a period of move, beginning and a directional, then you know right now what is going to come next. And that's going to be rest. All right? After the rest is another move or another behavior, and that is a test. So a test is a form of the auction checking itself to go, all right, well, you know, we've been going in a direction. So here's a directional, you know, move, and you know, we trade sideways like this, and now we move this way again. Now, at first, you don't know if this thing's going to continue or not. You don't know. So it could be a test. Now, if this had rejected and come back the other way, that would say we tested this direction, couldn't go that direction, and now we're coming back to an area that we rested. Let me see if I can find another one here. Here's a down move, okay? Down move over a couple sessions, sideways. Then note this candle right here. See this one? We move lower, but can we go lower? We cannot. And so we come right back to where we had rested before. So that's a test. All right, so when after we see a market move sideways like this, we know that one of the next behaviors to look for is a test. Or we can look for the last behavior, which is another directional move. All right, so if we go back to our Apple chart here, we had a directional move, then we had a sideways to rest, and then another directional move. Sideways, another directional move. So when you can identify these behaviors, it can help you, and because you know that they follow some degree of sequence, it can help you predict what's going to happen next. This is crucial, and you don't have to. I mean, look how clean this chart is. I don't have anything on here but price. That's it. And I'm already better than almost every person out there who's, you know, trying to say price is going to do this, price is going to do that, because these behaviors occur over and over again. Why do these behaviors occur over and over again when we look at stocks and futures and options? Because it's human behavior, and this is how humans have auctioned around items of value for millennia. It ain't going to change. It's consistent. You can trust it. You can lean on it. And once you can identify it, oh boy, it is powerful. These four behaviors are observable and consistent regardless of product and time frame. Okay, this is really trippy, but okay, I was looking here at a 60-minute time frame, right? If I go down here to a 5-minute, I will actually find the same things happening. Here's a move in 5-minute, and then sideways. Then it decides to move this way. Then what? Sideways, right? Here's a move. Comes back, trading sideways. Here's a test. Can't go that. Sideways. Here's a test. Oh, can't go back way. You know, come back into this zone here. Now I can see these a little bit clearer again because I'm close to a decade of looking at this. You may have to spend some more time just going over and looking at these, but once you've kind of been able to, you'll see. It doesn't matter what time frame you want to trade in. This stuff does the same. Let's go out to a 2-hour chart, 120-minute chart. Okay, sometimes you can, or we could go to a daily chart. move, rest, move, rest. You know, and sometimes these come in different areas. Move, and then rest. That wasn't very much of a move before they rest. Move, rest, move. A little bitty test up here, and then another move, and then rest, test, move. Okay, same 4 behaviors over and over and over and over and over again. Works for every product you can trade. Doesn't matter if it's futures, Forex, stocks, doesn't matter. Okay, and whatever time frame. So, you know, when you think about how much time you have to be operating in markets, being able to know these behaviors can help you. You know, if you want to, you know, if you have a job where you sit down at the desk, if there's a certain period of time of the day that you want to look for an opportunity, you can pull up a chart and you can say, hey, if I see one of these behaviors, okay, I saw a move. All right, I know what's going to happen next. Now there's a sideways move. All right, now I'm going to look for either a test or another move. All right, so if you see us start to move away from that move, you can go with it and know if it doesn't continue, you're wrong. Which we're going to talk about a lot about in the next module around, you know, how do you know if you're wrong when you're getting in? Let's talk a little bit more about some charting, since we pulled up one chart. Everything starts and ends with price. Okay, it's really easy to just get off the rails in your charts. Always start like this, you know, or you could, you know, if you want to, you know, a lot of guys who've been in the industry for a long time don't use candles, but they use bars like this, which is just an open, high, low. So, you know, on the left is the open, the right is the close. Sometimes it's a little bit easier to see than on a candlestick or a Japanese candlestick. And then these are colored by direction. Okay. You know, it's just another way of organizing price. We're looking at price on specific time intervals. Okay, but everything begins with price. I could add all kinds of indicators and other things onto this, but everything starts with price. Why? Because price is what's actually happening. Okay, anything that I would add to this chart is a derivative of price. What I mean by derivative, it means that it's a computation based off of what price is doing. And what I'm going to say next is going to save you, some of you is going to save tens of thousands of dollars, because you know that you would have gone and bought these systems and plugins and all this kind of stuff. The people who really move markets are the ones who operate at the larger time frames. They're the ones who have the most capital, and they're the hardest to move around. And so, you know, they're going to be the most powerful participant, right? They don't care what your signal says. So you may have a signal on a chart, a popular one. Let's add one here that is often added. We're just going to add with something that's called a MACD. All right, and we're going to create a new pane. Yep. All right. So as the story goes on a MACD, and this is just a very simple one. This is called a moving average convergence divergence indicator. The idea essentially being that if I'm above this line, then I'm bullish. If I'm below this line, I'm bearish. Okay, and you can see on this chart, oh yeah, it worked. It worked here, right? And then here it's bearish, but yet this went down and that went up. You know, we're back here being bullish. Oh yeah, so these are signals. People build trading approaches based off of something like this to signal them in or out. But nobody who's really moving markets cares what your chart says. The only thing that everybody is looking at is what is the price. That's it. So when you add onto your charts, and we see this all the time. We see traders who have all kinds of stuff on their charts, and they're like, "Well, you know, why do you have that on your chart?" Well, because you know, I saw this guy that had it on his chart, and he made this big trade. Okay, but do you have any idea what exactly that thing is that's on there? If you don't know what everything is on your chart, it should not be there. Let me describe this. you should know everything that's on your chart and why it should be there. If you don't know, then it should not be on your chart. Makes sense? Let me just show you what one of my charts look like. Open chart. Now, I know, I mean, you can see I have price. I also have some things on here called profiles, volume profiles, which we talk about in Module 4. It's also the namesake for this course, build the profile. It's how to use these. But I have price. I also have these lines which are called moving averages. They're based on, and they're different slopes based on different time frames. And then I have some other indicators down here. One is volume. This is just how much volume took place in that specific session. These others are called volume breakdown or order flow. And then this one down here is called a commodity channel index, which essentially just measures how far is price away from these moving averages. So it allows me to see that. Again, I don't believe that anybody else who's really moving markets is looking at the stuff the same way. So I don't build all of my trade ideas off of this stuff. This can help me recognize specific conditions and behaviors in the market, but it's not something that I'm triggering off of. So be mindful, especially you'll know that you're talking specifically to a technician or a technical trader when they're saying, well, this signaled and this signaled and this signal. Yeah, be careful about that stuff. Because there are no perfect signals, and you'll say, oh, this signal will never fail. They will fail. They will absolutely fail. So be careful around those. Start here. Can you identify the 4 behaviors and then add other aspects onto it that can help you further refine seeing those behaviors, right? That's the place to start. Now, on that part that you saw on my chart that was called volume breakdown, that has to do with this. And again, this idea that we're looking at an auction is what we're looking at. We're looking at price. In fact, we're looking at a continuous auction. So, you know, an eBay auction, if you go to eBay and buy something, that's a one-way auction, right? That you auction until the time's up and then you're done, over. A housing market is a continuous auction. Prices go up until nobody wants to pay those prices, and then what price do? Price goes down, right? And it has to do around what people are willing to bid and offer. What's the highest price somebody's willing to sell it? What's the highest price somebody is willing to buy it, or the lowest price somebody's willing to sell it? And you know, we can see this using something called some will call this a depth of market. Others will call it a order ladder. But this is crude oil futures, right? And on this side, we have the offer, and on this side we have the bid. And then right here is the current price. In fact, there were like 7 contracts that just traded there. Now, if I wanted to buy this thing and I want to immediately get into it, all right, I can just click in one of these and I'll immediately get filled at 49.79 because that's the lowest offer, right? If I want to sell this thing, I can get in at 49.78. It's the highest bid, right? These numbers represent potential orders that are out there. So there are orders that are out there, but they're not filled. So at this point, you know, they're just an intent. Now, if you ever are in front of a market and the market moves swiftly, here's how that can happen, all right? If I look at the number of contracts, there's like 33, 176, there's about 200, about 400, 500, 600, 700, 800. So there's about 1,000 contracts, 1,200 contracts that are right here that represent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 increments of price in 1,200 contracts. Okay, if I dump 12 or 1,300 contracts, okay, and there's only 1,200 that are offered, then this price is going to go like this because I'm going to clean up immediately all of these guys. But I'm going to get lots of different prices that I get filled at. That's why prices move like they do. It's because somebody who comes in big just cleans out the order book. Right? This is the mechanics of an auction that's taking place. And why, again, as a behaviorist, so when I see that behavior happening, what's it tell me? It tells me there's a big player there. It's, if I go back to the analogy, if I'm at the equipment auction and I see the big guy out there that can buy, guess what? He can clean me out. I'm not going to try to fight him. Price moves aggressively when action takes place at the bid or the ask and there is not sufficient orders to absorb it. Only a placed order matters. Others are intent only. So when you see, you may see some people saying, well, there's all of these orders out there. Until they're filled, they don't exist. They don't exist. Okay, let's talk about a couple simple setups, and then we're going to land the plane on this module. These are price action setups. One is called a price continuation pullback. All right, so let's go in here and let's look at 5 minutes. All right, and yeah, let's convert this back over to a candlestick just to make this just a little bit easier to see. All right, price continuation. So first what you got to do is you got to identify price moving in a direction. All right, here's the price moving lower. All right, and you can establish positions to the downside. Some of you who are just trading stocks, you think, well, I just got to find something I got to buy and it's going to appreciate. You can actually establish positions that appreciate as it goes lower. All right, so here's a price going lower. While the context of this is going lower, notice that there is a moment here where we go higher for a second before resuming lower. There's another moment here that we move higher and then we resume lower, and another here. So these are pullbacks that don't change the trend and provide you an opportunity to enter if you can identify the trend. All right, so one of the things to watch are what's the most recent pullback. So once you've seen price move down, you see a pullback, you can mark that. All right, that level. So then when it comes and it pulls back again, you can establish the short position as long as it does not take out this, because that would say that we had ended that trend. And then once it did this one and we move lower, then here's another one. So that meant you could enter up to this one without getting past it, and that would have given you a nice move. This is called the pullback on a price continuation. Okay, you can identify these. So find an area where it's moving, find the pullback that doesn't take back a less recent pullback, and go with that sucker. All right, that's one. Price continuation. The other one is a price reversal. So this is where you recognize an area that the price is moving lower, and here's a pullback. Price is moving lower, here's a pullback, right? So here's a level, and then down here, here's a pullback, right? And then notice price here exceeds this. All right, so that is actually an opportunity to get long. And the place that you would be wrong is that if we then again resumed and took out this low. So that allows you to say, if I go back across this, I'm wrong, and I'll stay long. Now, obviously, unless you booked here, you can see when the session reopened, you would have, been back to break even or out pretty quick. But this is a price reversal, right? Here's a move lower, here's a pullback, here's a move lower, here's so here's that line that you can mark. The next one comes up, touches it. Once we break through here, that's a place that you could go through. Where would you be wrong? If we take out this level, right? These are not the best setups, but this is where you start. This is where you start. There's additional context that you can add to this as we add additional tools. We look at this, but this is where you start. So the first one is a price continuation. The second is a price reversal. Right, so here's the homework. Homework is to compile a watch list of popular products. So let's talk about that. Let's pull up investing.com. And all right, I can go over here. There's a little watch over here, and I can have a, my portfolio. Okay, and I can add products. So, say I wanted to add Apple stock. Yep. Say I wanted to add Facebook. Tesla. Everybody talks about Tesla. How about Netflix? Maybe you like Goldman Sachs, right? We can have good stocks. We can have futures. You can have whatever you want in there, but then you can click on the chart, pick a time frame. So you can click over here to the candlesticks that allows you to see this. Pick a time frame. We're going to print out the chart. So we're going to watch review price, print out the chart, and you're going to mark it up based on the 4 behaviors and the 2 setups. And you're going to repeat this for multiple time frames, whether 1 day, 2 hours, 30 minutes, 5 minutes. Try to do it with multiple time frames. But this is the way. So you're going to build a watch list of popular products. If you're on investing.com and you go up here, you can look at specific markets and you can click on, okay, here's stocks, right? Trending stocks, or it's got a list of big stocks over here. Or most active. You saw that one. There's a most active. You can add some of those. Now play around, add those to your portfolio, print them out, and look at, can I identify these 4 behaviors, and can I find these 2 setups? So that's where the setups become more powerful, is if I look at them inside of the 4 behaviors, then it becomes a little more interesting. And we'll just look at one example of that before we head out here. So let me find one that is interesting. Yeah, this one's interesting. So again, we're looking at a 5-minute chart here. Okay, so one of our behaviors is what? A move. So I see the market's moving. So I know that the next behavior that's going to come after the move is going to be a rest, right? That's an opportunity to potentially get in. So here's the move. I know it's going to rest. Here's the rest. All right. Here is the pullback. Here's that pullback that happened. So I can buy, and as long as I don't go through this line, that's the price continuation, which gave you almost $1 move in Apple. And I can continue to trail this thing, and if I get another pullback, that becomes a mark that once I cross through that, then I'm out. So that would have taken me up here. Here would have been the cross, and then I'm out. So I can use the behavior. Notice where the behaviors are to be ready. Here I have a whole market that's in rest. So what does this mean? I'm looking for price reversals. So if I see the behavior is the move, I'm looking for price continuations. If I see that I'm in a trading sideways, these are across multiple sessions, this happens, then I'm looking for price reversals, and those give me opportunities throughout the day. Okay, that's the homework. Review the video, complete the homework, proceed to the next module, and as always, if you need any help, ping me at this email address, or give me a call. Or for those of you who are in a group build a profile, you can ask a question in the Slack channel, and we'll keep moving forward. All right, everybody, it's module 2, 2 down, 10 to go. See you next time.